Welcome back, guys, to another video by Fully Informed Trade, or Fi Trade for short. My name is Alex, and I'm just going to go ahead and review the stock market just for today and the Forex market and their correlation to one another. And I do want to also point out some key economic data that has come out of Asia. Currently, I do have the dollar index chart up right now. Dollar index is continuing its upwards trend, and I do have a positive bias on the dollar index, at least for this week. You have options expiration week coming in. What happens in options expiration is that stocks generally tend to pull back a little bit. Institutions that have sold call option contracts will most likely want these stocks to go a little lower so that these contracts will expire worthless. That in turn will save institutions billions of dollars and keep them billions of dollars and give them billions of dollars in profit. Now, I do want to point out some key economic data. First of all, China's inflation has missed expectations. China's January inflation was expected to be at 5.3%. Right now, the number they reported was 4.6%. They missed expectations, guys. This is very important. Mainly being in Keynesian economic theory, what happens is that the inflation is always accompanied with growth. Now, if you don't have an increasing money supply, what's going to basically happen, guys, is that you basically get a recession, and a diminishing monetary supply will cause the price of goods to also go down, and that in turn will cause recession. The price of labor goes down, price of this, price of that goes down. If everything goes down in valuation and the price of labor also goes down, then people have a harder time finding jobs in China. What basically occurs is that you get a standard recession, but the biggest issue with China is that they've been borrowing so much money to build all these properties, and about 60 to 55% of them are vacant. These properties are priced so sky high that they're unaffordable. When you build properties without affordability in mind, chances are you're looking at a bubble. Chances are prices will correct themselves so that the prices are reasonable enough to meet the average Chinese consumer of real estate. Now, another key point I do want to bring out is that we have a really, really high Chinese central banking rate, and it continues to go higher and higher and higher. Now, I do want to point out the fact that China may stop lowering rates as soon as China does go into a recession and they have two consecutive quarters of GDP what's the opposite of GDP growth, so a pullback in GDP. And after that, of course, you'll have a recession, and the Chinese central bank will eventually lower their rates. But remember, when the rates are really high in Keynesian market theory, what basically happens is that you have to increase lending by more than the federal or the Chinese central banking interest rate. If that doesn't happen, you will get a diminishing monetary supply. And if that happens, basically you're talking about a market correction in place, and that's exactly what you're seeing in China. This is the beginning signs of a major recession coming out of China, and it will only get worse in the coming years. 2013, 2014 is something you want to watch out for. The red giant is going to buckle, and it's going to buckle hard. Let's go ahead and look at the dollar index. Positive bias, you got this head and shoulder pattern in the Euro-US dollar. It's going to take a while for the Euro-US dollar to recover. I do feel that the Euro-US dollar will most likely continue its downward trend with some support at around the 50-day and 200-day moving average, which is basically the 1.34 and the 1.3250 area. So because of that, I do anticipate a weakness in the Forex, especially the Euro-US dollar. The dollar index continues going higher. That in turn will be a negative indication on stocks. Negative data coming out of China is also negative on stocks, and also the fact that you're in options expiration week is another negative point on stocks as well. Alright, now let's go ahead and look at family dollar. Family dollar is going to go up. Is going to go up dramatically. I did recommend a trade at around 43, I believe. Yeah, 43.10. Right now, it's going to go ahead and gap up to around 60 bucks, basically on rumors of takeover. $55 to $60 is the rumored takeover target. The main reason why do takeovers happen at lower valuations or when stocks pull back? Mainly because of the fact that basically, if you want to take over a company, you have to bid a price that beats the open market price by a huge margin. So basically that's what they did, and chances are it's going to go through because people are greedy and they want to get out of their stake and make whatever money they already have and make a little extra on top of that. Now, if this company were to decide to make a takeover at $55 when Family Dollar was at its all-time high, maybe 50 bucks, then they would have to do a takeover at maybe $65 to $70 per share. So it only makes sense for this company to go for a takeover when Family Dollar is a bit cheap. Now, that being said, how will this translate into a trade? Well, I do want to point out that Dollar General has a good chance of going higher because Family Dollar is going to go higher. Chances are Dollar General will go in, will move in a similar pattern. Not as much, but it will move in a similar pattern, and it could break out of this flag pattern. If it breaks out, the stock could rip much higher into the $29 and $30 area. Because of that, this is going to be a great play. You're buying in at the lower area of a channel. If it breaks out of the channel, even that much better, you'll make even more money. Please be sure to set some tight stops and a good risk to reward ratio. Let me go ahead and look at IVS Intel Media. This company has a very small market cap, but this stock has been hyped up quite a bit. Looking at this market, it has gone up by so much in so little time, guys. This is bad. It has basically, you guys have this type of pattern, which is a topping pattern right here. You have this ridiculously long tail. This is really negative. This stock will most likely gap down and continue going lower. You have some support at around $2.40 and even lower at around $2.22. But I pretty much believe that this stock will fall by around 20%, making it a great short opportunity. A great short opportunity, and this will yield some great profits. Let's go ahead and look at the next chart, which is going to be the Standard & Poor. Like I was saying earlier, if you're trading call options, now is about time to lick your wounds, sell your call options if you own them, get rid of them. Chances are institutions will try to push down the value of these stocks by a huge portion. That in turn means that you shouldn't be holding on to these call options, and certainly not into expiration. Let's go ahead and look at the next stock, which is Delta Petroleum. This stock is also being hyped up a bit. Probably a good area to put a stop at is around 71 cents, maybe 70 cents. That would probably, probably 71 cents would be a good area. That would give you basically a 3-cent loss, maybe a 4 or 5% loss. If it does play out that way, and if it goes up to around 80 cents, which I anticipate it will, then it will go up probably around 10%, probably a 10% gain for you. So pretty much a 2-to-1 risk ratio, and that will be a great play for you. We do have a good trade triangle on this one as well. So just want to point that out to you guys. We have a great trade in Delta Petroleum, which is ticker symbol DPTR. Let's go ahead and look at the next chart, which is Evergreen Energy. Evergreen Energy does have a downward trend in play. It is also another small cap play. And remember, this stock has just roared higher. It has just gone up so much, oh so much. And I'm going to tell you one key point. You have this topping pattern, you got another topping pattern, you got a continuing downward trend. That implies that this market should go lower. If it does, $2.80 will be your target area of support. $2.80 will be such a great target. And another thing I do want to point out is that if it does fall down by that much, that would give you a $1.10 gain. That in turn will be something like a 25% gain. So do keep in mind that you're going to have some great profit potential in Evergreen Energy. This stock, if it goes lower, as low as I anticipate, then you will be making quite a bit of cash as long as you're on the short side. Let's go ahead and look at the next stock, which is going to be Apple. Apple is another play that I do want to point out. Apple is trading near its highs. Now, it's trading at all-time highs. And the main reason being is that Apple is releasing their iPhone onto the Verizon network. The Verizon network is a bigger network than AT&T. Believe it or not, AT&T is one of the world's biggest cell phone networks, but following right after what's bigger than that is the Verizon network. And iPhones sell like hotcakes on the AT&T network. They will sell like hotcakes on the Verizon network as well. It only makes logical sense. Chances are iPhone sales will either double or triple in the next coming 2 years. And because of that, earnings analysts, they're going to will just fuel their expectations so much higher. And because of that fact, chances are Apple stock will go up to around $450 to $500. Will be the most like that will be the valuation you could anticipate out of this. Mainly being that since these executives lack any creativity, what they're going to basically do is increase their market exposure, market potential. And because of that, if they increase their market potential, chances are the stock will trade at around $500 to around $450. And as you continue seeing what Apple does, you're going to basically see these executives without Steve Jobs. They're just going to create probably different versions of the Apple iPhone, maybe something similar to the Samsung Epic where you have a slide-out keyboard and a touchscreen iPhone. Who knows what Apple is going to do? But chances are Apple is going to increase its exposure to the market by going onto different mobile networks. It could go into mobile networks in Mexico. You know, there's a lot of telecom companies in Mexico, right? You could all iPhone really has to do now, or all Apple really has to do now, is just expand the networks it offers its products on. So all Apple really has to do to increase growth is increase the number of networks that it sells its iPhone on, and that in turn will cause earnings to go higher and higher and higher. It doesn't take that much creativity, but you're probably going to see an iPhone eventually on Sprint. You're probably going to see it on T-Mobile. You'll probably see it on the Virgin network. You're probably going to see it on so many different networks globally that iPhone is just going to be synonymous with smartphone no matter where you're at in the world. And because of that, it doesn't really take creativity to know that at this point it doesn't require Steve Jobs. All it takes is these executives to basically say, hey, we're just going to release the iPhone here, we're just going to release the iPhone there, we're just going to release the iPhone here. And that in turn will cause earnings to go higher and higher and higher still. There's a lot of demand, and there's going to be more demand in the future. Let's go ahead and look at the next chart, which is going to be the ProShares Ultra Short 20-year. I did recommend a short on the short, and it did work out very, very well. But I do want to point out that now's the time you want to be a little leery. The Ultra Short is only going to be good up until the end of this week, mainly because of options expiration. Options expiration will cause stocks to pull back. When stocks pull back, that in turn will cause the ultra short to go down as well. But at the same time, when the bond market eventually stabilizes after going a little higher, you're basically going to see the value of the bond market go down and continue its downwards trend. And if that happens, the ultra short will continue its long upwards trend. So because of that, great short-term short. Longer term, it is much more recommended to be buying into this Okay, that's all for today. If you guys want to have more in the coming weeks and months in the future, please be sure to go ahead and subscribe to my YouTube channel. You're going to see more of this. And also, if you're on Facebook, go ahead and tell your friends about me so they too can also, I guess, add me on Facebook and watch the videos that I provide them. And if you're on Twitter, just retweet this so all of your other Twitter followers may be able to, I guess, watch this. Alright, that's all for today. And I look forward to making more for you guys later. Take care.